We got some huge news for quantum computing stock investors as the company was awarded a contract with NASA. In this video, I'm going to go through the details of that contract and what it can mean for quantum computing stock investors. Great news to be sure. Let's take a look at the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so on December 17th, 2024, Quantum Computing announced that the company has been awarded a prime contract by NASA. This contract marks a pivotal step forward for quantum computing by applying its entropy quantum optimization machine, the DRAC-3, to support NASA's advanced imaging and data processing demands. This is great news for the company. Not only does it give the company some revenue, although the details of how much they're going to get were withheld from this statement, but it also gives the company's technology some validation. If NASA is employing the company's technology, that gives other government institutions more backing, more foundation to go ahead and give the company a contract as well, because they can point to NASA and say, well, if NASA gave them a deal, then it looks like they vetted the technology and it could be powerful. So let's go ahead and look at their technology as well. So the contract will apply DRAC to address the challenging phase unwrapping problem for optimally reconstructing images and extracting information from interferometric data generated by radar. So this is advanced cutting edge stuff here, and the technology will be utilized, and then NASA will give quantum computing feedback and tell them, look, this worked really well, this didn't work so well, can you improve this, can you add that, can you take that away? And the iteration will improve the company's technology, will improve the commercial viability of the company's technology. So the company is saying that QCI is proud to support NASA in this critical mission to process large volumes of data more efficiently. The project's goal is to demonstrate how the DRAC-3 can address the phase unwrapping problem and allow NASA to compare results and benefits of the quantum optimization technology with state-of-the-art algorithms running on classical computers. So it'll be a kind of head-to-head comparison here for NASA, and the results of that comparison will also be beneficial for quantum computing. Either way, if the results come out to be positive and quantum computing's technology is more effective, then that will be great news for the company and more institutions will be interested in the technology. If the results turn out to be negative, where quantum computing's technology is worse than the existing classical computers' algorithms, then they'll get information that they can then utilize to improve their own technology and make it better, make it up to par, and find how and why it was not better than the classical computers. So either way, this is a good testing ground for the company and its technology. If it works, great. If it doesn't, it gives them information to utilize and improve the product. Now, quantum computing stock has been on fire in the last 3 months, and that would be an understatement. The stock price has exploded from around $2 a share in November of 2024 all the way up to $24 a share as of this recording, a more than 10x increase in about a month. And that's why I said it would be an understatement to say that the stock has been on fire. Now, what that means for the company and investors is beneficial in a couple of ways. Number one, it's beneficial if you own the shares. You've experienced a huge increase in the share value, and so you're absolutely thrilled about these results if you're a shareholder, so congratulations. The second way it benefits the company is it allows them to raise more money through a stock sale, something they already announced on December 10th, 2024. They said they would be selling about 1.5 million shares of its common stock for about $5 a share. This was on December 10th, $5 a share. Their shares are 4 times higher than that price now. And they raised about $50 million with that stock sale at $5 a share. So imagine now if they were to go back to investors when the share price is now over $20 a share, how much money they can raise from investors now. So they already got the 50 million, and they can add another 50 or 100 or even 200 million if they were to sell the same amount of shares, because the share price is so much more valuable. This is what I talk about with companies like quantum computing. These innovative companies that have yet to generate significant revenue. You can see here the company's trailing 12-month revenue is $386,000. It's not really generating that much revenue. It's still in very early stage development, the research and technology. And in that same trailing 12-month period, they generated $24 million in operating expenses. So there's a big difference between their expenses and their revenue on the unfavorable side. But that $50 million that they raised at this pace will give them 2 years of runway to continue research and development, to continue developing this technology. And now that the stock price is over $20 a share, if they were to go back to investors and let's say raise another, let's say they do 250 million this time because the stock price is so much higher, that will give them, 10 years of runway to continue developing this technology. And it'll almost ensure that they can bring this product to the point where it's commercially viable, to the point where enterprises are regularly seeking out this technology and finding use cases for this technology. So that's how big of a news this is for the company. It literally means several more years of survival, several more years of research and development runway for a company with this innovative technology. They only had about $3 million in cash before raising this $50 million. That $50 million that I talked about, that stock sale on December 10 is not included in this balance. So they were running extremely low on cash. So that cash infusion was huge. And then on top of that now, with the stock price at over $24 a share, they can theoretically bring in, and I would be surprised if they don't. I think it would be prudent for management to go out and sell some shares here to raise at least another 50 million, maybe even 100 or 200 million, while the shares are exploding, to ensure that runway for research and development, to ensure that you get this product to a more commercially viable stage. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.